chip giant Nvidia has reportedly asked its component suppliers to stop production related to its H20 AI chip. The information says the company issued the request after Beijing urged local companies to avoid using the chip that's specifically designed for the Chinese market. Authorities in China had sounded the alarm over alleged security risks after Washington officials said they were considering ways to equip chips with better location tracking capabilities. Nvidia, on its part, has repeatedly denied it built such features into its product.
Government, the Trump administration has approved licenses for us to export H20s to China. Recently, China asked some questions about some security backdoors in our chips. We have made very clear and put to rest that H20 has no security backdoors.
Let's bring in Ed Yardeni, president of Yardeni Research. Ed, we know that the news couldn't come at a worse time. I mean, how big a risk is this to tech stocks and the rally we've seen so far?
Well, you know, tech stocks have had a heck of a rally in the United States and other parts of the world, and I think they were overdue for some correction or at least sideways move. And I think it was just waiting for something to happen like this to cause some profit taking. So I'm not too concerned about this. I'd be more concerned if the tech stocks were continuing to melt up. So having some minor correction in the technology names is a good thing. But you know, this is just another example of the fact that there is a trade war going on between the United States and China. We haven't got everything agreed, and it looks as though it's going to be a very fluid situation. You know, we have a kind of a verbal agreement that both sides take positions on and have different spins. And then, you know, the next day everything changes. But I think Howard Lutwig, the Commerce Secretary, basically said some things about the chip, the H20 chip, that it was kind of an inferior chip that we were selling China. And I think there was also an issue in China about kind of, you know, getting an inferior product.
So the recent tech sell-off that we've seen is just, what, investors taking money off the table? I mean, we saw Palantir giving up more than $70 billion of market share. I mean, yeah. What, do you buy the dip if you believe in the story?
Well, I don't think you have to buy it right away. I think that if you look at the seasonality in the U.S. stock market, late August, September, you can have sell-offs. They're not known to be particularly good periods for the market, and so I think we're going to see tech get cheaper into September, maybe make a low in October for a year-end rally. So I don't think there's any reason to chase these things. Clearly, this tech rally that we've had was based on very strong earnings for the Magnificent Seven, the cloud providers, as well as the chip providers. And they just got a little bit too close to the sun, you know, kind of like Icarus. When you get too close to the sun in a melt-up, you run the risk of having the wax melt and the wings come off. I don't think it's that serious, but I think we did get too close to the sun here with some of these valuation multiples. I mean, Magnificent Seven had a forward PE of 30. That's awfully high.